basically have two countries that have been fighting so long and so hard that they don't know what the fuck they're doing. Do you understand that?
Well, ladies and gentlemen, that is your introduction for today. Trump cussing. He is not a happy bee, I'm telling you now. Now, listen, we're getting all sorts of reports about, is the ceasefire happening? Is it happening or not? We're hearing that Netanyahu has been adamant that he has to make sure that these attacks continue. You're getting a lot of mixed responses with regards to whether this ceasefire is coming into play. You see, Trump spoke first and said the ceasefire is happening. So it's like Trump is coming out with a force of dominance, but then Israel are like, yo, listen, we're not done. And then apparently Iran has attacked Israel and there's rockets going all over the place and they're saying it wasn't us. The markets right now, guys, are just reacting to whatever news or anything that comes out of Donald Trump's mouth. Or Israel's. Or is there an attack here? Is there an attack there? Oil's price slumping to the downside. 15% nearly wiped off the face of that. And the NASDAQ fractionally off an all-time high. So all-time high on the NASDAQ. And you've got interest rates. Just to let you know, by the way, yesterday there was the idea that the Fed is going to be cutting the interest rates maybe sooner in July. Awesome. Now short-term interest rate traders are betting the idea that the Fed might not actually cut. It's whipsaw, price action. It is, how do you put logic together? And this is why, as a trader, you've got to really say to yourself, I'm either going to trade a reaction or wait until something happens, and then when the dust settles, naturally price will go back to its norm, and I can trade that small movement, whatever it is. But fundamentally, ladies and gentlemen, you are at the whim of anyone's opinion about anything in this marketplace. And you've got to be bloody careful when you're putting on risk. Trade as light as you can. The goal is to stay in the game. And when the markets do settle, and I said this morning, when the markets settle and we don't have a war to be worried about, and we haven't got worried about Trump saying something about tariffs, and we know where we are with interest rates, even though Trump has been banging so bad about Powell, and Powell is speaking in the next 55 minutes, he wants him to cut the interest rates at least 1 to 2 points to effectively recreate or bring back in $800 billion of capital into the marketplace. And Bitcoin is going to take some of that flavor too. Now, listen, what I'm going to do in today's live stream, I'm going to break it all down for you. I'm going to help you understand why NASDAQ making an all-time high is something to be excited about. But at the same time, if you haven't got leaders of specific industries making that movement with NASDAQ, then it could be a little bit of a false move. So make sure you stick around for when I start breaking that logic down. We're going to be talking about Bitcoin and what the story is with regards to that. We're going to dive into some Forex and understand where we are from that point of view, given that all this madness has sent the NASDAQ up, the euro up, the Japanese yen up, gold down. Hold on. Aren't we in the expectation that interest rates are going to be cut? Surely gold's price should be moving up. Aren't we in a war? Surely gold's price should be moving up. Wait a second. Why is the NASDAQ moving up on a depreciating dollar? What are they doing? Well, if the volume's not there, then that would sustain the idea that smart money is actually selling into this retail rally. So it makes you wonder, what do you take advantage of? You see, a lot of the market is trying to price in what's going on, and they're trying to project what they can expect in the future. So retail's coming in and buying up as many things as they can because they feel like they're missing out. And on every single move to the upside, after an all-time high is taken, it's the most climatic move that you can see in the market. There's always a big drop from it. And when all the macros align together, because quite frankly, ladies and gentlemen, there are no macros right now. Yesterday, what did you see? You saw the home sales came in, 4 million, so much better. Brilliant. You had the manufacturing PMI showing that it's still above 50. So that means it's expanding. There's no contraction. That means the US economy is doing great. So the dollar was like, not interested. It goes down. When you get data for the dollar that's favorable, dollar goes up, euro goes down. Euro nearly traded plus nearly 0.5% yesterday. That is wild for the euro. So we're going to break all of that logic down, ladies and gentlemen. And if you are new to the channel, my mic, the other microphone, but don't worry about that anymore. It's all good. But yeah, let's break it all down and understand exactly what the story is. Here we go. So yeah, Trump, man, like, he's pretty cheesed off about the whole story, but let's just break it all down and understand where we are. As it stands right now, stocks are holding gains, oil has taken a bit of a tumble, and Trump has been forcing this truce. And Iran did say that you can't force a ceasefire. It has to be agreed on both parties. Now, this is what Trump's been saying. He says Iran will never rebuild their nuclear facilities, okay? So why are you probing the beast? Like, why are you trying to provoke people by saying these sort of things? Now, naturally, it just goes to show you that Trump and the impact that these bombs have had by the US has pretty much wiped out where Iran is in terms of development of nuclear weapons. Just don't say that. Listen, you bombed them. Okay, cool. Just be quiet. Now, did they really bomb them? I mean, it's a lot of everyone's talking about it's a theatrical performance. It's fake. It's this. They're trying to get our attention away from something. But it looks like everyone's reacting to this. So you've got to pay attention to whatever narrative is being played. Going into it all, you've got this. Israel is not going to attack Iran. All planes will turn around and head home while doing a friendly plane wave to Iran. Nobody will be hurt. The ceasefire is in effect. Thank you for your attention to this matter. I mean, it's a little bit difficult. And then when you see articles like this, Israel-Iran latest, Israel strikes back at Iran despite Trump warning. What are we going with, guys? And this is what I'm saying about the marketplace. You're getting smacked left, right, and center. You're having to react to 1 minute it's this, next minute it's that. I mean, Netanyahu had to say that he could not counsel the actual attack, even though Trump had warned him. He just doesn't feel like if he stops this war, he would effectively lose his position in power. And that's what everyone is saying. He's saying that as long as he keeps on doing what he's doing, he's going to stay in power. So there's that aspect to it, but not to go into politically to it. But what I'm trying to convey to you all is this is how the market is having to react to things. Information that hits the marketplace, whether it's truth, whether it's false, the market fundamentally reacts. It takes a key word, ceasefire, bang. NASDAQ makes a move to the upside. So going into it right now, having a look at it, you can see the NASDAQ had made that significant move to the upside. I mean, yesterday's price action was whipsaw madness. It was crazy how they came down on bad news, came up on good news, and it was just crazy to say the least. But looking at NASDAQ right here, you can see that we are so close to that all-time high. Just go over to it right now. You can see, look at that. It's absolutely despicable. The high that was achieved last night in the Asian session, they came so close towards that point. Okay, now this is where it gets interesting on what I really need to convey to you all to understand about all-time highs and the justification for it. So if you're a stock trader or you're an investor, this is going to, in my opinion, this is going to help you understand if all-time highs that happen, are they supported with the general stock market? So let me draw your attention to something. In front of you is the NASDAQ Composite Index. Now, yesterday's price action led the NASDAQ to come in with volume just slightly below average, okay? Just below average. And if you look on the top right, you can see that the price action itself, if you zoom in on, if you're looking on the phone, you can see that price had closed at the top end of its day's range, but couldn't quite get above the previous day's range, okay? Which happened to be on the Friday. So it was volume decent, but not so great, but it couldn't quite close above that previous price point. So that could be a bit of a problem for us. We go into yesterday's price action, we can see that volume was down. Look at that, volume is down. And also look at the number of distribution days on the NASDAQ. A distribution day is effectively a number of days that builds up in the stock market where institutional investors are offloading stock. And they tend to do this when prices are rising, which then takes us over to the idea of the smart money, dumb money chart. In front of you, the smart money, dumb money indicator is suggesting to us that smart money is in a neutral stance. Last reading was at 0.51, okay? Now, I'm looking for this blue line to come down. If it's coming down, it means assets are going up because smart money is selling into retail, which is where you get the split on this chart. When the red line is at the top end of the range, it means dumb money is excited, it's happy, it's greed, it's optimistic. And when the blue line's all the way at the lows right here, it tells you that they are, in principle, preparing themselves to start buying again, which in principle means that prices of assets will start to go down, because that's in principle what they do. They bid, they buy as prices go down. Okay. And that's what this chart tells us. What it's telling us right now, that it's flat in the middle here. Okay. Now, something that you do need to take into consideration, back in the idea that the volume is not so much present in the NASDAQ, and the fact that they are selling on the way up, more on the S&P than there are on the NASDAQ. Okay. You've got to look at other participants in the marketplace that would grant the idea that when NASDAQ does clear its all-time high, is the volume going to be there? So what you've got to look for is this. And this is important, by the way, because if NASDAQ is going to continue higher, that means all the stock market is loading up. That means cryptocurrency is naturally going to move higher as well. So this is important. If you are looking at buying crypto or what have you, or getting involved in crypto, use the stock market. Use it because it helps you understand if commitments coming into the tech market, then naturally people involved and surrounded by tech are going to be thinking about other assets that could be deemed somewhat tech, like Bitcoin. What's the old saying that gets coined in crypto? In it for the tech. Stick to what's going on in the stock market as a gauge to understand where money is effectively going. Now, NASDAQ volume is below average here. Now, here's something else that you wanted to pay attention to. You want to go over and have a look at what's going on with stocks. Now, we know that the NASDAQ is made up of a lot of tech stocks. At the same time, this is NVIDIA. And is NVIDIA giving you the sign that it's getting ready to break its all-time high? Well, it looks like it's coming back towards that point. And I said that NVIDIA will clear its all-time high. But the problem that I've got with this is this. NVIDIA wasn't, what the hell is this fly doing? Of all bloody time, you come now. What NVIDIA is doing right now is it's not even able to come above the previous day's open. And yesterday it wasn't such a bad day in the marketplace. It was a decent day, but it traded effectively negative. Okay? In this candlestick right here on the Monday. Okay? Not on the Monday, on the Friday, right? Going into Monday, it couldn't quite close above that point with strength. Now, what you're looking for is this NVIDIA yesterday should have broken out and probed at least the 150 range, because that would have supported the fact that the NASDAQ was moving up and investors were going into tech stocks. But because the volume below here wasn't above this red line, suggesting that volume is above average, because the overall volume itself wasn't that great anyway on the NASDAQ, not even on the New York Stock Exchange overall, it then grants the question that, is this breakout to the upside from the NASDAQ, even though it's got such a small amount left to clear its all-time high, is it being supported by the heavyweights? If NVIDIA was all the way up here and was about to break out, it would add weight to the breakout of the NASDAQ. What about Google or Microsoft? Where's Microsoft? So Microsoft right now, if we just look at its current price action on the 6-month chart, it's already at all-time highs, okay? It's doing bloody well, to say the least. It's just not bloody stopping, okay? Look, it's just brilliant. What a stock, okay? It's doing great. When we go into it all, we have a look at where we are with that price action, and we say to ourselves, is this one of the stocks that are breaking out higher? Well, you can see that it has actually made an all-time high. It's doing really well, okay? Now, when we go into other assets, let's go over to Amazon. Amazon, it's not really breaking out, okay? It's not really doing anything. It's not even able to break out from this high over here. Going into other assets, go to Netflix. That's a heavyweight, $1,253. Nearly missing its all-time high, but it's doing all right, but it's not breaking out just yet. Who knows? Maybe we could see a breakout, okay? Going into Apple, where's Apple at? It's just trading at its lows. And of course, Apple's got a lot of issues with regards to these tariffs on what it can do and what it can't do overseas. I mean, NVIDIA has got the problem, of course, with regards to this restriction on chips being sent to China. And the last restriction that Donald Trump put out on China, it cost NVIDIA nearly $5.5 billion in revenue. So maybe that's being reflective as to why NVIDIA's not making the move to the upside. And finally, Google. Google's pulling back. It's not at the all-time high. So let's be frank here. Microsoft, is that the only thing that's going to be leading the market to the upside, sustaining the idea of a breakout for the NASDAQ to continue higher? So one stock? No, it's not going to be the case. We need Microsoft to keep going. We need Amazon to keep moving. We need Google to keep moving up. Meta needs to keep moving. Netflix, we need to see NVIDIA just keeping on this movement to the upside. And that would validate the idea of a breakout to the upside for the NASDAQ and sustain the idea that, yeah, maybe we are in a bull run. And NASDAQ can continue to claim all-time highs and just keep on moving higher. But if the volume's not there, you've got to be very careful just in case it's a blowout, climatic top, everyone's trapped, everything reverses. So that's where we are right now in terms of understanding the all-time high that NASDAQ has tried to make. So where are we in the respect of interest rates? Well, let's just go over and have a look over here. Right now, the word on the street is, we just got some article coming in, Fed hammock, I don't see any imminent case to cut interest rates. What did they say yesterday? This is what I mean about these speakers. Yesterday it was, we're going to cut as soon as July. Hammock's coming in saying, I don't see any imminent case to cut interest rates. On top of that, he says, it may well be the case that the Fed stays on hold quite some time. That's why I said yesterday that the Fed, it's not ready to cut the rates. They're still betting the idea that in July, it's going to stay at 4.25, 4.5%. Okay? Which this in principle supports the idea that this move to the upside for everything, there's no weight to it. If we know that we're going to get the cuts and they say we are going to cut and Jerome says, yes, we are cutting, that, ladies and gentlemen, will solidify your moves to the upside. There will be weight to it because investors will then start to price in the idea of money being cheap. They will pull money out of Japanese yen. They will go and borrow the yen. They will then start going over and converting it to dollars, start buying dollars, borrowing dollars because it's cheaper, and then they'll put those dollars to work. But if you're now hearing one of the members of the Fed saying that there's no reason for us to cut the rates, kind of puts us back into the boat again. Now, short-term interest rate traders are expecting that the Fed's probably not going to cut the rates anytime soon. So now we're going to have to witness that pricing in the charts, which now means that there is a strong chance that the euro in principle will more than likely continue to go higher. Forget the short-term intraday movements. With Forex, you've got to take into consideration the perception of value. It's very important that you focus on the perception of value. What do I mean by that? It means how many euros can I exchange now to get me some dollars? How many dollars will I get off the back of a strong euro? How many yen can I convert into dollars and put those dollars to work based on the cost of borrowing yen? These are all the questions that are being asked by your rate swap traders, your credit swap traders, and all the traders out there that are managing millions and millions of dollars for people on their behalf. They've got to try and generate yield. So in these times when they're discussing interest rates, especially when it comes to Forex, you have to look at it in terms of perceived value. So graphically, you can see that euro is up right now. Cool. Wow, now where is the dollar? Well, the dollar's taken a smack to the downside, okay? What's the perceived value over the longer term on the dollar? It's depreciating, so it's going down. So what does that mean? It means that investors are plowing into the euro. Why are they going into the euro? Because the interest rate is only 2.14% with the prospect of them decreasing it even more. Their inflation is down. They're spending more on defense. Money's going to keep going into the euro. And they're even talking about the possibility, like the IMF did last week, that the euro could effectively be something of a world currency reserve. Maybe. That's why Trump hates the euro. Anyone in power in the US knows that the euro is really the only one contender against the US dollar because it makes up 56% of the dollar dominance index. You got the yen coming in second place at 17%. You got the pound coming in at 11, and then after that you got the Canadian dollar. The Canadian dollar, if I'm correct, I think it's about 7 or 8%, something like that. Okay. But it's all about the euro. So perceived value says that it's cheap to get this. You can get lots of dollars off the back of your euro. Okay. So when we do get the rate cuts, investors will transition and say, all right, euro is overpriced right now. I'm happy with the amount of euros that I've got and the value. Let's now go into the dollar and start picking up dollars on the cheap because the rates are now being cut because I can now go borrow those dollars. They don't always have to just get the euros converted to it either. They can go to a bank and say, you know what? I'm happy to borrow dollars right now. What's the rate? They'll say, right now, it's been smacked. Of course, you're not getting that much of appreciation on the dollar, but it's cheaper to borrow. I'll take that. And that probably explains why the dollar itself yesterday was coming down, because it was now in sync with oil. It's going down with oil. Now, usually when dollar goes down, oil technically should be going up. But now oil's going down, dollar's going down, and things aren't adding up. But when it comes to Forex, that's what you're focusing on. You're focusing on the perceived value. How much more of something can I get with what I have? And how can I put that to work? We can even go over to the Aussie yen as well. Aussie yen is another carry trade principle. We focus on the Japanese yen, but we also look at the carry trade on Aussie yen. And Aussie yen is starting to make a little bit of a nice slow climb ever since the NASDAQ made the move lower. Aussie yen has made the move lower and made the recovery back up. So when Aussie yen's going up, it means that they're selling their dollars, putting it into Aussie, and then putting the Aussie into the stock market, which is why it's so important that when Powell speaks today at 3 p.m., he's coming out, having a conversation, and he's going to be testifying. It is over a 2-day event, and Trump has said that he needs to get something sorted out for this, he said, stupid, dumb person, whatever it was, but he called Powell dumb. It's a bit of a story. But again, Forex is going to give you the direction on where investors are going to be planting their money, taking it, converting it, borrowing it, so that we can then see the beauty of it going into the stock market or cryptocurrency. Speaking of cryptocurrency, guys, Michael Saylor is now back to pitching Bitcoin strategy to credit model to Trump's FHFA director. So again, he's just trying to sell the idea of Bitcoin. What would he need to be saying? You know, I mean, there are a lot of old school heavyweights in Trump's administration, but it's a young administration when we think about it. Besides Trump, you know, I don't think they really need that much schooling on it. But looking at Michael Saylor, he's going to be pitching that idea. I mean, we go over to MicroStrategy as well, just to understand where we are with that asset. And it's not really doing too bad. Let's be honest. I mean, I've got this big green vector candle region right here that I would naturally expect MicroStrategy to come into at some point, because even at $241 a share, it's still a valid retrace to start collecting bids in that sense. But we also have this vector. I do believe it or not, guys, I do expect MicroStrategy to clear its high at some point from a structural point of view. Okay, I do expect it. But, you know, with that being said, depending on the environment of what's going on in cryptocurrency, it could get compromised. It all depends. And if investors start wanting to pull out their liquidity from the bond that they purchased so that Saylor can go and buy Bitcoin, this one is a catch-22. It's about how investors or the collective of investors feels about the fact that MicroStrategy isn't really going anywhere, okay? Going over into the Arkham to understand where we are. We haven't had that much flavor going into the Arkham just yet. I mean, we've got 682,000 on the balance, and we haven't really seen that much activity given the last few hours or so. Nothing from BlackRock, but BlackRock did a lot of buying over the last couple of days, so they might just take a little bit of a break now. But we're seeing some maneuverability, but it's very, very light as well. Nothing's really happening. Just quickly go over to the Bitcoin ETF. It's still trading sideways. I mean, I've got a price projection of this to go to around anything between $80 to $100. I expect it to go to that point. And on the back of that going up, it means that Bitcoin's price action is going to show some movement to the upside. But it all depends on how the market's going to navigate with all the uncertainty surrounding the war. Okay. Now, quickly going over into Bitcoin price action, you can see that yesterday's price action, Bitcoin made a nice big move with the green vector, failing to clear out the 50 EMA, which is a little bit of a problem for me because I would have preferred to see Bitcoin clear that range, but it's now come back into the red vector candle region. There's nothing per se for it to come back up to, but from a structural point of view, the traders that do that, you've got lower highs. You've got this high right here, and then you've got another lower high, another one, and it's doing the same thing, which could be consistent with a move to the downside. But of course, this range right here has been motivated by news. So you've got to really take that into consideration. Like I said, you've got to be paying attention to what the stock market is doing. If the volume's coming into the stock market one way or another, it's going to go into crypto. Why would Bitcoin go up on a ceasefire? Bitcoin should have been going up on the back of the war, not going down. It should have gone up when the war was happening because investors will want to seek the alternative. Just look at the environment we're in. Dollar is losing its appreciation. Why are people not going into Bitcoin just yet? Maybe they are with the ETF, but they could also be short in Bitcoin to the downside. So again, we've got some certain strategies that could be happening over there because Wall Street is playing cryptocurrency very well. Going into the order flow of Bitcoin, we've got here that we've got this sideways price action, all right? We've got some bids coming into play here. And if you just notice the relationship between the bids and the offers, you can tell that they're not really spending that much time holding the Bitcoin. And this is the problem with Wall Street. They don't share the same view of hold till the moon and parabolics and rainbows. They don't share that mentality. Apparently, there's new whales. And the new whales are the ones that want to make some money and get the hell out of the asset. okay? Because Bitcoin is deemed as a risk-on asset. Now, when we look at that, to put that into the truth and the facts behind it, look at all these bids. These are bids where people are buying up the Bitcoin, okay? Equally, they're looking to sell it at the same time. What we're looking for is we're looking for Bitcoin bids to come down, which would then say that but they're prepared to buy. The longer duration they spend buying the Bitcoin, in other words, the more Bitcoin marks lower, okay? In the future, that rally is going to continue and beyond when they surpass this range, okay? So if we just go back and look at it on a higher time frame. So let's go on the 4-hour time frame over here for Bitcoin, all right? And just look at this from this perspective. You can see over here that you've got all of this move to the downside where price has been going down. That's where bids are coming in. They're buying. Then all of a sudden, the offers all start to come in and they just keep on offering price higher and higher. So, believe it or not, the longer Bitcoin goes down for, the higher it will go when it rises. So do you understand why I would naturally want to see Bitcoin come down? Because the more Bitcoin comes down, the more people are buying it, the chances are that Bitcoin will then start to recover and it will just keep on recovering. That's why people have this expectation that Bitcoin's price is going to keep on going higher and higher. What, because of adoption? What, because everyone's buying it? Yeah, there's the idea of everyone buying it, but people are buying it when it's dropping. They're not buying it as it rises. Retail gets sold to. So the longer Bitcoin pulls back, the bigger the move from Bitcoin when it starts to rise again, because each of those participants who have been buying the Bitcoin inside of all this range here, they're going to start selling their Bitcoin. And you know, we've got lots of people that want to sell the Bitcoin. No two ways about it. But that's because the Wall Street traders who are playing this currency, cryptocurrency, they have a short-term expectation and want to try and make some money as quick as they can. That's why you see Bitcoin making a move up and making a move down and just getting people excited about the parabolic move that's on its way. All right? When you are holding out at these highs for so long and you make fast moves up, equally met with moves down to then see the move back up again, it's anything that is going to give them a reason to sell, they'll do it. So yesterday, ceasefire, Bitcoin pumps, that's an opportunity to sell. And I can prove that to you because you'll then have participants that will be coming in, placing orders more than what the initial order was, okay? Because they're seeing that prices are rising. So let me explain that for you. So here is an example here, all right? So let's say we've got, let's find an order. Here we go, look at this. So this order here at 104,000, the original amount was 908,000. That was the initial amount. But because Bitcoin started to rise, it kind of triggered, whether it was an algorithm, a certain participant, it triggered to sell 2.04 million. So it encouraged someone to sell more than what the initial order was. In other words, people saw that price point and they plowed into that area on the expectation that if I can get it at 104, I'm going to sell it. And that's shown that with that 2 million. Going into it as it goes even higher, anything else? Here we go. You've got another player right there that the original order was for 1 million. Then all of a sudden 4.7 was transacted. So it's telling you participants are looking at these price points and selling as soon as they can. Now, there's probably a very strong chance that the guys that were buying the Bitcoin on this move to the downside are equally the same guys that are selling it all the way up. Okay? So when you see, look at that, 511,000 is what they wanted to sell originally. That was the original order. And it transacted 4.64, tells you people are just coming in like, oh my God, 106,000, I'm selling. And then that's when you get those resistance tops, because there's less of those participants wanting to transact more, which will be forcing price higher. But in principle, if the liquidity down below is starting to rack up, the market will go and transact where the liquidity sits. Now, there's liquidity everywhere, ladies and gentlemen. It's got nothing to do with anything else, but there's money everywhere. There will always be a supply. There is never an instance where there's no one prepared to buy or sell. There will always be it, but it's all about the concentration of the buyers and the sellers and what is being allowed to be transacted on. Because if the market algorithms, because they are programmed to move to certain areas, if it can see that based on the certain algorithm that Bitcoin's processed with, for example, on a first come, first serve basis, if you've got an order here on Bitcoin for, say, for example, there's an order of Bitcoin at 106,200. You're looking at that saying to yourself, it could be an area of resistance. All right. Now, you're looking at it thinking because price hasn't gone up, it could be an area of resistance. But this order right here comes in at 106,000 and it's stacked for 50 million. But then you've got an order down below here that has only just come in for an order of 15 million. Okay? You're looking at the top move and thinking maybe Bitcoin's going to transact and hit that because it's been there for 5, 6, 7. It's been there for a few days now and you've been monitoring it. But then all of a sudden, this order comes in. And you'll think to yourself, okay, then, well, that's 15 million, but that's to the downside. I don't think price is going to go there because that order's been up there for a little while. It all depends on the algorithm that's at play in that day. Because if it's on a first come, first serve basis, it's whatever order's closest, no matter what size it is, and no matter how long your order's been in the book for, the price will just go to that order and transact at it, regardless of however long it's been in the book. But then you've got other algorithms that come into play where it will be the orders that have been there the longest, and price will just keep on going to those orders that have been there the longest. So that's what I mean about the algorithms that come into play, because you see how price behaves. It transacts continuously. And that's what I mean about supply will always be there. There's no such thing as demand, no demand or no supply. It will always be present in the marketplace. And that's how I use the coin. That's how I use the idea of bid and offers to help me work out how likely Bitcoin's going to go from one point to the next. You don't always get it correct, but when you've got a framework that you can work with, it's going to help you understand how Bitcoin is likely to go from one point to the next, with the exception of Donald Trump intervening and butting in and ruin everything and telling everybody when they can go to war, when they can't go to war, and all of that BS. But anyways, with that being said, guys, your market is now open, and I think that is it. Mad love and respect for passing through. Hit the like button. Tune into tonight's video as well. I'll be speaking to you all later on, all right? And be safe out there, guys, okay? Mad love and respect. Peace.